Welcome to video 5, and because video 4 was longer than I expected, I've divided it into 2 videos, and this is video 5. And just to recap on video 4, we talked about the specific entry conditions and we looked at setups for the E75 system. And we looked for areas where the stochastic was overbought or oversold. We looked for areas where at the same time the price was touching or through the 100 or the 200 Bollinger Band, and ideally through both of them with a confluence. And go back to the previous video if you want to see what a confluence is. And we also looked at the stochastic and the possibility of divergence. And then we looked for a trend line break where the trend line was at least 3 hours long, where the trend line was clearly formed by at least 3 touches or more, and also where the trend line was smooth. Now, I'm very lucky today, very fortunate. This is the trade I showed you earlier on video 4, where we've actually taken profit on this downward trend. If you remember, we had an entry earlier on, and this has moved down beautifully, and we've now got a setup for a long trade. So I'm just going to highlight this to you quickly, and I'm going to get this thing out of the way. I haven't quite mastered how to get rid of the picture on the screen, but you can see we've just about touched the lower Bollinger Band, not quite, but that's close enough. We've got an oversold stochastic, so that's good. We've touched this well, I'm not sure where the 100, that's the 100 period Bollinger Band. I'm going to scroll down in a minute and look for the 200 period Bollinger Band, but I imagine it's pretty close. And then we've got this very lovely trend line. We've got 1, 2, call that 3 touches, and now we're getting this bullish candle moving upwards. Okay, so I want to talk about the specifics of the system entries. And basically, as you know, we're looking for a break above the trend line if we're going long, or below the trend line if we're going short, with all the other entry conditions in place. Now, what we're going to try and do here is set parameters for when we can't take the entry, how to set the stop loss, and how to set the target. Now, the target we'll talk about in a minute, but I'm just going to keep this trade on the screen while we're talking. And the first entry criteria, or criterion, is that obviously we have all the conditions in place. And I'm going to try and so 1, we need all the conditions in place. 2, we need to be able to set a reasonable stop loss. 3, we need to be able to set a reasonable target. And 4, what was number 4? Now I've been here, number 4, we want to use the principle of support becomes resistance, or vice versa. Alright, so here we go. We've got a trade setting up and all the conditions in place. We've got oversold there. Let's just see where that other Bollinger Band is. It's pretty close, so we've almost got a bit of confluence there. It's not exactly perfect, but it's close. So we've got the conditions of oversold just about touching the 100 period Bollinger Band. We've got a beautiful trend line. We've moved from Bollinger to Bollinger, which, if you remember in my last video, I said was ideal. So when we get an entry signal, like we did here, for example, to go short, we've come from the opposite side Bollinger Band, which we've got here. And now we want to, so all the conditions are in place, and now we want to be able to set a stop loss for the trade. Right, actually, I think I've jumped the gun. The entry, let's talk about the entry for the trade before we talk about the stop loss naturally. The entry is when we get a confirmed, and this is important, trend line break. And in order to get a confirmed trend line break, I'm just getting my notepad closer. In order to get a confirmed trend line break, and the key word is confirmed here, we need a candle close on the other side. Okay, and the key word there is close. So there's no point in us piercing, for example, piercing the trend line, but closing beneath the trend line. We need to have a candle which goes through the trend line, and whether it's got a wick at the top or the bottom doesn't really matter, or both. We need it to close on the other side of the trend line. And obviously we're going to be monitoring it at that stage every 5 minutes. Now, in order to find the setup for the trade, you know that we need at least a 3-hour trend line in one direction or the other. So once we start moving down here, there's no need to watch the charts carefully, because we're basically waiting for a move down to the opposite side Bollinger Band, and also one that's at least 3 hours long. So you can probably take 2 hours off once you see the trade starting to head towards the setup. But once we get down towards this area, the trend is 3 hours long in this particular case, as far as I recall. So we started at 0800 and now we're just around 1100, so that's just about 3 hours, and this is the time when we start to monitor the trade carefully. And we need a close above the trend line. So this candle or the next week, and it really is only every 5 minutes. You only have to watch it every 5 minutes, not every second. So on the next candle, which takes place 5 minutes after the close of this one, we then see has it closed above the trend line or not, and if it has, then we have the next condition for an entry. So a close on the other side of the trend line. The second thing then we need to look at is how far away the stop loss has to be if we do take that entry. Now, the stop loss generally must, in the case of a long trade like we are we're heading towards now, the stop loss must be below the low of the signal. Now, the low of this signal is obviously over here, and that price is there, right there, is 28.60. 28.60 right there. And as a rule, I like to place my stop loss 5 pips on the other side. So I need my stop to be at 28.55 if I take a trade entry. Now, in the current conditions, you can see that we're moving enormous amounts in short periods of time. We've moved from 1.3 to 1.2850 in the matter of 2 hours. We've moved about 150 pips. Now, for those of you who have been trading for a short time, will think that this is quite normal. But for those of you who've been trading 2 years or more, you'll know that this is extremely volatile at the moment. Why am I saying this? Because, excuse me, because often when we get a strong move like this, often the stop loss is too far away from the entry. So let's say we get a close above here at 2900, our stop loss needs to be at 29.55. That's a 45 pip stop loss. And why am I pointing out 45 pips? Well, there we are, back live again. Because I want my stop loss generally to be 30 pips or less. 30 pips or less. Stop loss 30 pips or less. Now, we know where we have to put the stop loss because it's got to go on the other side or below the reversal candle, the reversal pattern. And we know where the entry is going to be once we get it, which in this case, if it did go up, it would probably be 29.05. We know the stop loss has got to be at 28.55, so that's a 55 to 60 pip stop, and that's no good. I want to be able to set my stop loss at 30 pips or less, ideally, and in this particular case my stop loss is going to have to be probably 60 pips, so that invalidates the trade. Okay, now I'm going to show you an example of the entry and where the stop loss should be. I'm going to give you a couple of other examples. So this is the key. Just remember, we want the stop loss 30 pips or less. So let's go and have a look at, we did have a couple of other trade entry examples, and we might not get a good example on this currency. I'm just going to pull, because the euro's been extremely volatile just over the last couple of days, but the dollar yen, in fact we looked at some of these trades yesterday. So let's have a look at this one. We've got a really nice setup here. The longer term trend line there and a shorter term trend line here. Just going to check that that's 2 hours. That's about 9:30 to 11. That's only about 2 hours long. But let's just disregard the time frame for the moment, the length of the trend line. I want to use this as an example for stop losses. Right, so I'm assuming we have a short entry signal here. We got overbought stochastic. We're through the Bollinger Bands. We've got a nice Bollinger Band confluence, and now we need to see where the stop loss needs to be. So we've got to, let's just have a look at that more closely. There, I'm going to just zoom into this actually. There's our close beneath the trend line. You see that? There's the trend line going up. That candle there pierced it but didn't close beneath it. That one pierced it but closed right on it, and this one was the first one that closed beneath it, and we then immediately enter the trade on that close. And I can actually tell you exactly what price that close was. It was 90.86. Okay, so my selling price is 90.86. Now we need to check whether that is close enough to where the stop loss needs to be. In other words, we need to be within 30 pips of the stop loss in order to validate that trade. So the high is over here, and just remember that 90.86, and the high of this candle, in other words the top of this pattern, is 90.95. Right, so let's have a look at this more closely. The entry price here is 90.86. The high is, I've forgotten what it was now, 90.95, I think it was. Alright, now onto that, remember we want the stop loss to be 5 pips higher, so 90.95 plus 5 gives us 91. Alright, and then onto that, because we're selling and we want the stop loss to be above the high, we've got to add the spread, and I normally add another 5, let's say 3 pips, depends what your spread is, but I take the spread and I add 1 or 2. So we need to add another 3 pips onto 91, so we get 91.03. Alright, so let's make that 91.06 for simplicity's sake. We've got 91.06. Our selling area was 90.86, and that gives us a 20 pip stop loss. And that's perfect. 20 pip stop loss. Alright, so I hope that sort of illustrates. Let me just do another one perhaps. Let's look for another trade. Well, let's take this one. I want to find a valid trade for you. And there's one right there. This is during the Asian session, so it's not during my trading time frame. So we've got a lovely trend line there. We've just tagged the top Bollinger Band. We've come from the bottom Bollinger Band, so we've got a beautiful trend line. And we've got an overbought stochastic. We don't have Bollinger Band confidence, but that's fine. And now I want to have a look at the entry candle. And you can see, let's have a look at it closely. Just zooming in. You can see that's the first candle that closed beneath the line. In fact, that's just about on the line, but that one's closed beneath for sure. And so that would be our entry price on the close of that candle, the moment it closes beneath the line, and the close was 90.63. Keep that in mind. No, 90.66. So keep that in mind. The high of this topping pattern is over here, where the stochastic was overbought, and the high, so that was 90.66. The high of this candle, 90.73. So let's just work that out again. So we've got our entry price 90.66. We've got our high at 90.73, and onto that I'm going to add 5 pips for the system. I'm going to add 3 pips for the spread, whatever your spread might be. That's 8 pips, so that gives me 90.81. Alright, and once again we've got a very small, we've actually got a 15 pip stop loss. So you can see that very often we can get stop losses even smaller than 30 pips. Sometimes if the stop loss has to be bigger than 30 pips, you can, let's say it's 35 pips for example, you can just round that off to 35 to 30 pips. Okay, there's the trade we were watching. Now this will be the first candle that closes above the line. We've got 3 minutes to go, so I'm going to watch this and come back in 3 minutes and then do the entry sequence with you. Alright, we're back and just about waiting for the rollover here. As you can see, once again we've got a brilliant entry signal from the system, but as I'll point out to you shortly while we watch the rollover, the entry price is so far above the reversal point that our stop loss would have to be, we're already at 29.20 and the low was, we said 28.55, so we've already got a 65 pip stop loss on here. But so that immediately invalidates the trade because the stop loss is way too big for the system. There we go, we've just had the rollover. So the entry, so we're at 29.17 now, plus the spread gives us an entry of 29.20. Remember I said this is not a valid trade because we need to put our stop loss at 28.55, and that gives us a 65 pip stop loss. So unfortunately a great trade, but stop loss is way too big, and that immediately invalidates the trade. Now look at this already going up. So if we got in there at 29.20, we'd be 8 or 10 pips up already by now. And if you were a scalper, you could close that quite happily. But you can see the system works beautifully, but for reasons that I'll explain to you a little bit later on, we cannot risk a 65 pip stop loss, even if we reduce our leverage considerably to equate it to 20 or 25. I'm going to be talking about leverage and all that sort of thing much later on in the series. So so that's that. So that price is moving up really nicely, 15, 12, 13 pips in profit right now, but unfortunately no trade entry, but you can see the principle of the system works really well. In fact, this is probably heading up towards a 20 pip profit straight away. Okay, so let's just recap. The stop loss, okay, let's go all the way back to the entry signal. And I'm just going to, the entry signal and the points that I've covered so far, the entry is on a trend line break and close. Very important. close on other side. Okay, first of all, the entry is based on a trendline break plus a close. Has to close on the other side of the line. It cannot just poke through and kind of come back down underneath or above, depending on which direction you're trading. It must close and remain there on the 5-minute rollover. The second principle that we've talked about is the stop loss should be 5 pips above or below the reversal point. Okay, so two things we've talked about so far. The entry must be on a trendline break and close on the other side of the line, and the stop loss has to be set 5 pips above or below the line, above or below the reversal point, and bearing in mind that you have to take spread into account if you're selling, because the stop loss has to be a buy, and you have to take the spread into account. And the third criterion which we talked about here was that if the stop loss is greater than 30 pips, and let's say plus minus 5, so you could push that up to 35 pips maybe, but generally if it's greater than 30 pips, that invalidates the trade. In other words, no trade. So previously in this video, in the previous video, we saw that there are 3 conditions for a trade. One is the trend line, a valid trend line, which has got 3 touches, it's smooth, at least 3 hours long. The second one is that we have an overbought or oversold stochastic, and the third one is that the price touches or pierces through either the 100 or the 200 or both Bollinger Bands, preferably with confluence. And now we're talking about money management, and we're saying if the stop loss has to be greater than 30 pips, there can be no trade. So that's really, in a sense, condition number 4. And it's not a technical condition, it's based on money management. And if the stop loss has to be greater than 30, let's say 35 at a push, then the trade becomes way too risky. And I'm going to tell you why it's too risky to have a large stop loss. Even if you reduce the leverage to account for that greater stop loss, it's still too risky. Okay, so let's talk about targets now. Right, I'm just going to get a blank screen so we can talk about the targets for the trade. Yet another sheet of paper gone. So, trade targets. A couple of principles here. Targets. First of all, the first principle is, and there's a number of ways we can look at this, and once again, excuse me, there's just a telephone call. Alright, sorry about that. There was a pretty urgent phone call that I was waiting for. Alright, so where were we? You talked about we're talking about targets. Okay, so I just had to gather my thoughts there. Targets. And there's a variety of different ways that you can set a target, and it is a little bit subjective, but once again, trading isn't an exact science, and we're trying to get it as exact as possible with E75, with the various entry criteria, and making sure that we only enter on certain high probability zones, and making sure that everything's in place and that we control the risk. And targets, really, there are basically 3 simple ways of setting targets, but you'll see a little bit later on that probably in the next video that targets become flexible once the trade's open. But we always set a target before we open the trade, and we need to know that there is a decent target. So first of all, in general terms, I aim for 40 to 50 pips I want to know that I have the opportunity of making 40 to 50 pips on the trade, and there's no real obstruction to that. Obstruction. I don't want an obstruction to that. Secondly, so that's number one. That's what I aim for. And as a rule, that's basically double to 1.5 times the stop loss. And if you have your target at somewhere around double the stop loss, you can win you only have to win 33% of your trades to break even if you achieve double your stop loss every time. So if my stop loss is 25 pips and every time I win make 50 pips, even if I lose 66% of my trades, I'll still come out at break even. You work it out, do the math, it's pretty incredible. So the first principle is 40 to 50 pips. Second principle is I always keep an eye on the opposite side Bollinger Band as a mental target. Okay, I aim or keep an eye on the opposite side Bollinger Band. And let me explain how this works to you. So, for example, if I was short over here, I aim for the opposite side Bollinger Band. That's my sort of mental target. Okay, that's what I mean by that. Again, here, if I was long here, I aim for the opposite side Bollinger Band, either that Bollinger Band or that Bollinger Band. That's an area that I keep an eye on. There's another pretty important concept here, and that is that I look for, or I look at, where the longer term trend line is. That's meant to be a T, longer term trend line. Alright, now I'm going to explain that to you fairly. Let me just try and do this. Okay, let me just put up those principles first, and then I'm going to rewrite them for you. And let's just get some space here. So principle number one, principles for targets. One, I want to aim for 40 to 50 pips. Pips with no obstruction, and I'll tell you what that means. Oh, that word there is obstruction. Secondly, I want to aim for the opposite side Bollinger Band. And thirdly, I want to aim for the longer term trend line, and I look at where that is. So I keep an eye on all of those. So I want to know where 40 or 50 pips away is, I want to know where the opposite side Bollinger Band is, and I want to know where the longer term or the shallower trend line is. I'm going to give you an example of all of these right now. Those are the principle for the targets, okay? Now, all of these targets here, that is simply a guide or an ideal. Right? It's a guide or an ideal. In reality, while we're trading, in reality, our targets will be much more flexible. And will be based on price action. So in fact, our targets could be bigger, or they could be smaller. All right, so let's look at those three: 40 to 50 pips, opposite side Bollinger, long-term trend line. And let's get this chart back in place. Right. I wonder if we can use this trade as an example. I think we'll use the previous one today. Alright, so this is the trade we looked at earlier. Okay. And I'm going to draw in the longer term trend line, and I want to show you what I mean. I'm going to draw in two trend lines here. Now, I've got two trend lines that I've drawn in by eyeballing this chart. I've got the steeper trend line, which is in fact in this case only 2 hours long, but let's say, ignore that for now, and let's say this was a 3-hour long trend line. And then I've got the shallower trend line, which is the longer term trend line. I hope you understand what I'm saying by that, because you'll see the longer term trend line is always shallower, and it always either starts further back or it goes further into the future. Now, when I enter a trade, I want to know, first of all, that I can get 40 or 50 pips out of this trade. Actually, that's not a particularly good example, so I'm going to try and find a better one. The only reason not a good example is, well, the only reason it's not a good example is because this longer term trend line is not, it doesn't make sense in this particular case. But let's just ignore that. I'm going to talk about the Bollinger Band and the 40 or 50 pips away. So if I enter the trade here, you can see there's the close beneath the trend line. Let's say it's 29, let's call it 29.80. I want to know that I can get down to at least 29.30, which is here. And you can see there's no obstruction between there and here. There's plenty of opportunity for it to move down. We're not near the bottom Bollinger Band. There's no sort of major support level or anything like that. I wouldn't worry about those fine details too much, but all I'm saying is make sure that you can aim for 40 to 50 pips without any major obstruction in the way. Particularly the opposite side Bollinger Band or the longer term trend line, which I'm going to talk right now. So 40 to 50 pips, no problem there. The lower Bollinger Band is a long way away. If we aimed for the lower Bollinger Band, it wouldn't be an issue. In fact, there was about 150 pips away. As it happens, in this case, it did go that far. Right, now what we're going to do is say, well, what is the target for the trade? Well, if we can get 40 to 50 pips, in other words, double the stop loss, and again, in this case, the stop loss wasn't 30 pips, it was more, but I'm probably confusing you all now, so let's get a decent example. Right, here's one example I can show you. I'm going to try and show you another one shortly. But you can see here we've gone from Bollinger to Bollinger, which is what we like to see. We've got a lovely smooth trend line coming up here with a couple of touches. There's 1, 2, and we're in our third touch. And well, once again, our stop loss is way too big. And this is, remember, I must emphasize that this is not normal. Over the last couple of weeks, we've seen huge moves in the currencies. That is not normal. And there are still plenty of opportunities to trade with smaller stop losses, but on occasion you won't be able to. So anyway, I'm going to ignore that for now. There's the trend line, there's the trend line break. Here's the first candle that closed beneath the trend line, and at 134, the lower Bollinger Band is 133.40, so that's 60 pips away. That's our first obstruction to going further down, but that's fine because it's 60 pips away. That's not a problem. And so there's no longer term trend line. If you have a look back, there's no obstruction from the longer term trend line. For example, if there was a trend line sort of, and there isn't, coming up, you know, from here, you know, from here all the way up here, then we would consider the longer term trend line as a potential obstruction. And I think that's all I'm going to say about that right now, but basically what we're looking for is room for 40 or 50 pips to move, and we're looking at the opposite side Bollinger Band, and we're looking for space to move 40 or 50 pips, and we're also looking for the longer term trend line. I'm going to talk about the longer term trend line a little bit later on when we talk about adjusting the targets. Alright, so that's basically it in terms of entry and targets. And there goes our trade. It's still going up, which is nice, which again just sort of confirms the system is can't get rid of this. There's no right click on the pen. Alright, so that I think will be summarized in the transcript a little bit better than it is now, but I'm going to try and just quickly put it up on the screen again for you. Let's just make some space, and I hope I don't miss out the points that I've been talking about. But we want stop loss of no more than, we want it less than 35 pips, let's say. We want a target of 40 to 50 pips. Ideally this would be 20 to 30 pips. We want a target of 40 to 50 pips. Remember, that target's flexible, and we're going to be watching as well as looking at the obstructions such as opposite side Bollinger Band, longer term trend line. We're going to be watching price action, and we're also going to be using things like moving stops to break even, SPE, that means stops to break even, and we're going to also be using stuff such as trailing stops. Okay, the hardest part of a lot of trading is the exits, and we're going to be focusing quite a lot on the exits. The easy part in this particular trading system and most others is the entries, and you've seen that the entries are quite simple, and the part of the great skill of trading is in determining where the exits are going to be. Okay, so I'm just going to pause this for a second. So this whole little section here was about the entry trigger, and the conditions for that. And I'm just going to, for fear of repeating myself, I'm going to continue to do so anyway. So the entry trigger one is a trend line break and plus a close. And of course, let's just put this into brackets, all conditions must be in place. And we had three conditions, remember? A valid trend line, we had oversold or overbought, and we had the whole Bollinger Band thing. So that's got to be in place, of course, and then we need a trend line break and close beneath or above that valid trend line. And then three, we need to determine the stop loss, and we need to know that that's less than 35 pips. And remember, you've got to add the spread if you're selling, and you've got to add 5 pips for safety, as a safety margin. Okay, and if all of those conditions are in place, then we have an opportunity to buy or sell, and then we're into the trade. As long as we got a trend line break and a close beneath or above the trend line, as long as we got all the other conditions in place, a valid trend line to start, which is 3 hours long or long, it's got 3 touches, etc. As long as we got oversold, overbought, stochastic, as long as a Bollinger Band touch will go through or pierce through the Bollinger Bands. And remember, in these conditions here, just these ones, I know I'm jumping around, but watch out for divergence and watch out for confluence. Alright, and then we have to, after all of that's in place, and it might sound a whole bunch of stuff, but it's not that complicated at all once you start practicing it. Once all that's in place, we need to determine what the stop loss has to be based on the reversal zone where we're looking to enter on the trend line break, and we need to place the stop loss 5 pips above or below that reversal area. We need to add the spread if we're selling, and if the stop loss is 35 pips or less, then we have a valid entry signal, and we're into the trade. And that really is the easy part. Alright, and then the second thing I spoke about in this whole section here was targets. And I said number one, we want to aim for 40 to 50 pips. Number two, we want to look at the opposite side Bollinger Band, see how far away that is, because often the price moves between Bollingers, from Bollinger to Bollinger when it's raining, not when it's raining, when it's ranging. And 3, we need to look at the longer term trend line to see where that is. And I said all of these things here are goals or ideals, really, but a lot of it will depend on price action. And in the next video I'm going to be talking about monitoring the trade and setting targets, exiting the trade, and using trailing stop losses, when to move the stop loss to break even, when to exit the trade, and so on and so on. And I'll be covering that in the next video. Till then, cheers.